is going to be your manipulation of this accumulation, manipulation distribution, right? Now this also goes hand in hand with a PD array, taking liquidity on the bottom end to then flip over to longs eventually going forward. Okay? Not only this, but on the hourly time frame, we can clearly see that we have a very good looking curve to the upside. A buy model. All right? And if you take this said buy model and pull our deviations accordingly, like how we should, from the first swing low to the first swing high for distribution, we can see that we got to close above 2.5, breaking structure. Now we're getting a pullback between 1.5 and 1, which is our silver bullet zone. So then target our 4 and 4.5 deviation. If you're new about deviations, that's kind of how things work, right? If you get a close above 2.5, you'll see a pullback between 1 and 1.5, and then a push up towards 4 and 4.5. Typically how it goes. Okay. So now this is going to be due with our high time frame structure as well. So if we go over to again our daily time frame, we broke structure to the upside. We are bullish on the daily time frame. Do not be mistaken, right? This pullback is a silver bullet zone, weekly FEG, daily FEG, and it's a proper pullback for our next leg up for price. It makes sense. And what's around the corner for us, for the guys in the US? Election is around the corner. They're not going to let the stock market fall on its face before election time. They're going to pump it up, prop it up, and make it look nice and pretty for election time, and then just use it for their advantage. Okay? I've been saying that for a long time, since February or like the new year. We're going to rip up, we're going to have a pullback, and we're going to rip up even higher before election. All year long I've been chanting for that thing to happen, and it's happening. So I think all-time highs are in the future again. It's inevitable. Okay? But be prepared to make the most out of this next leg up, because I feel like after this leg it's going to be just chop city. Chop city until election is over. That's my prediction. So with that being said, right? What it boils down to is structure and using simple ideologies to get your trades done. Okay? And if you don't have a high time frame draw marked out, then you shouldn't even be trading in the first place. So show of hands or show of poll. I'm going to do a poll real quick for you guys. How many of you okay. Me and not me. Answer this poll if you're in this call. And be honest. There's no shame. $50-50. Yeah, the 4 hours do the job most of the time, bro. But like today, I had the same thing as you. I'm like, oh man, it's 4 hour time frame is looking juicy. It's OTE with an FEG. I'm solid, right? But I got raped and I was confused. I'm like, what the hell just happened? But the daily time frame was so much more clear. The 4 hours will work most of the time. The days they don't, they fucking suck, because you see them work all the time and then they just don't. So it sucks. It's a bad burn when they don't work. And that's okay too, Tai Tai. I feel like most of you guys also, you wake up, right? and you expect to know what's happening in the market. You look for a trade right away, and you don't actually wait for setup. You just kind of look to get in super quick. I'm a big victim of that myself, right? Whenever I see price action after the first hour or first hour and a half, it's so much easier for me to see the market and what it's trying to do versus the first half an hour, right? So as of lately, I've been kind of sleeping in a bit. I've been waking up at market open and getting online at 10 o'clock. I just skip the first half hour of the day because I try to guess and make my best judgment call. When in reality, it's better just to wait for more information to be given to you to then make those very, very clear judgment calls with already given data. Know what I mean? So that's good, bro. If you notice that for yourself, then keep doing it. Right? Don't get on hella early and try to guess what's going on. Just wait for it to develop more. Like I always say, and it sucks too because with you guys, I'm in a bit of a predicament because I trade live, right? And having a Discord kind of makes you want to trade live and trade every day more than what I'd like to. If I'm being honest with myself and you guys too, right? If it were up to me, I trade maybe 2 times, 3 times a week on a very, very, very good setup. Okay. But that isn't good for content or trying to get clips for trading or trying to get, engagement from the group. It's very boring and very like whatever, blah, right? But if it were up to me, I'd only trade 2 to 3 times a week. That's it. And the best guys on earth only trade a few times a week or even a month, right? But again, they're using high time frame stuff. But here exactly, right? If you're sticking to high time frame, you will see a bigger shift in your win rate because they're more consistent and they happen very, very few times in the week or month, right? They aren't consistent. They don't happen often, but they're hella consistent. That's what I'm saying to you guys. If you need to have a very, very like mechanical way of looking at the chart, just use high time frame. It'll be way less trades, but they're gonna hit a lot more than usual. Promise you. Of course, bro. Let me hear it.
Yo, hello?
Yo, what's up?
Yo, so I tend to notice things, like I said, I tend to notice things like right after like there's been movement and more data that's been given.
Mm-hmm.
So when I looked at like the daily, I saw that there was like a swing high and like the swing low made on a bigger time frame. And so I pulled OTE and I noticed that for this week's opening on a Sunday, it perfectly tapped like 0.62. Is that like a valid OTE pool, or should I be looking at it from like a bigger picture from like let's see, around 1700 area?
No, that's good, bro, because what you're doing is you're taking OTE on both sides. So the way OTE works is it's an algorithmic way of looking at price action and how it should be being sold and bought, right? So on the downside range we have for the daily time frame, which is what you pulled it off of, right? You were in premium, so we're due for a pullback, right? But since the structure is ultimately bullish because we have a higher high compared to our last high, right? We should also use OTE for the upside as well, because then price will be at an algorithmic point to then be bought up. So OTE is simply just, again, it's your optimum trade entry that is used according to your dealing range. So what you did is perfectly fine. It's valid on both sides. But you want to be able to make sure that you're also in line with your structure because that will give you a move that will exceed that current dealing range onto a new high. Does that make sense?
Understood. We'll keep working on it.
So for example, I'll show you on the chart here. So your pull was fantastic. So what you're doing is you're using this dealing range from this high here and this low here, right? This is your range of price that you're in since I would say like July from early August. So this was your pull from the swing high to your swing low. And this is your range. Top half is going to be premium, bottom will be discount. Okay. For price flipped up here, it's because price was in the premium of our range, so it's being sold off. We're due for a pullback. And the OTE of this range was where you pulled it at, which is fantastic. You're right. On the money. Okay. But we also have a second dealing range from this low to this high. And this is the one that we're going to be using going forward because the structure of this price, bullish. A low, a high, a low, a higher high. So now our new OTE that will carry us to make our low and a higher high could be this. And that would be ideal. But in reality, if price goes as low, I don't see it being bullish at all because our PD arrays aren't down here in OTE. They're still above up here where we are right now. Make sense?
Yes, thank you.
That wasn't as strong as a break of structure this morning. That wasn't as strong break of structure this morning. I wouldn't even call that break of structure, honestly. On the 4-hour chart, was there an FEG from August 15th that today's short looked into that have been valid to predict shorts? Hour chart. To be wicked into which one? August 15th. I'm failing to see where you're pointing. We're seeing that at, Jason. From August 15th, it's over here. This one here. Or am I dumb? That's where it wicked right now. A short wicked into that have been valid to predict shorts. So you're asking if that was a good PD rate to target or to play off of for shorts? Which one? A target or an entry? Target. Oh, that makes more sense. Okay. Yeah, I mean, with the idea of price moving between liquidity and also imbalances, then yeah, a target for an imbalance would be a good spot to aim for, right? I mean, if you see where price is going to go to rebalance, then you should just target that imbalance. So what you're seeing is right too. But then again, what I would do is I look for the bigger time frame ones to really see where price needs to go, right? Because while the 1 minute and 5 minute FEGs don't get tapped all the time, the dailies and 4 hours and the weeklies always get tapped into, right? So that 4 hour you're looking at right now is a daily one on the 14th and 15th and 13th. So it all boils down to the same thing. It's all high time frame movement. It's tricky whenever you have consolidation high time frame, then it gets really ugly. But if you're looking at some like targets, like on the 4 hour, 1 hour time frame, I'd pop over to the high time frame and see if it lines up or not. Again, because the thing that trigger the movement is all high time frame. It's not low time frame stuff. This is where all the big money plays. So now what Akram's saying for longs, doing some swings, I'm gonna do the exact same shit. This looks good for longs. I'm gonna get some weekly calls on options and see what they do. Because this looks primed for a long, and guess what? My position will look like this. I'm gonna be getting in, market open. Hopefully it's around here somewhere. Stop loss will be the low, the FEG, right? And then just target for the all-time highs. Done. That's a good RR. It's a 10 RR. That should be like a 500% gain. So again, like catching one of these moves can make you enough money to last a month versus having to wait and try to scalp these different time frames and getting lucky, then getting stopped out, then getting lucky, and it's so annoying. It's so annoying. More trades, right? More clips for your Instagram and for you to show off to, but in reality, it's not the best way to trade, in my opinion. So going forward, right? I'm gonna trade a lot less because I'm gonna be looking at high time frame stuff again only because I need to make some money. I got a house to pay for. So scalping shit is, bro, it's no more. I know some guys would like kill me for saying it, but this is swing trading, right? Swinging is like 2, 3 to 4 days, or you like weeks at a time. But in reality, I would just do like weekly swings from like Tuesday to Friday or Tuesday to next Tuesday, right? Those are the best ones. Catch the weekly distribution and you're done for the week. One trade, one and done. So yeah, the move is tomorrow I'm gonna hit a wire to my account, get some weekly calls, see what they do, let it ride. And then guess what, right? If this one gets just blown through, this FEG here, then what is our obvious draw on liquidity? If we don't respect this bullish PD array to keep us up on a high time frame, then what is our obvious draw on liquidity? Somebody tell me. If it's not up, then it's what? Down. If it's not up, then it's down. So once you're wrong and you realize that you're wrong, right, and price wants to go lower down to this liquidity down here, then what do you wait for? A proper entry. Good. You don't just get stopped out. Oh my god, I got stopped out. Let me go short now. No, bro. You have to wait for proper entry. Yeah, this looks like AMD too. Accumulation, manipulation, distribution. Daily FEG, weekly BPR. It looks good, bro. Structure's bullish, high time frame. I like it. End of year for elections coming up too. You're gonna pump it up like crazy. I like it. When you plan on swing trading, are you just buying the same shares as you would day trading, or just holding for a week or however long? So swing trading, it's a bit different, right? It depends on how you want to do it. So I used to do CFDs, not anymore because all the accounts that had funded accounts banned MT5, and I hate the DXTrade platform. It's garbage. It's gross. I'm working on getting an account overseas from somebody that I know, so I can use it. But until then, I'm going to be doing options again because options is the only way to efficiently trade and swing trade with low capital. You can do futures still, but you have to have a big bankroll to actually fund your margin overnight to swing trade your position. But options give you some leeway for low margin and low funds. So I'll be doing that. I'll throw in like a ban its options and see what I can do with it. Because options you can trade with, $55 to $1,000. It just depends on how many contracts you buy. So yeah, that's my plan. Until I can get a CFD account, options for swinging. And if I see a really, really clean intraday trade, like, for lunch macro or the rebalancing macro, whatever it may be, right? I'll go on my personal account on futures and play that. But in terms of swinging, options for sure. And it's unfortunate because CFDs were very, very clean and easy to swing on. Like, super easy with MT5. I loved it. My favorite type. But that's illegal now, so. Sucks. For US residents, we can't have a CFD account. It's against the law. And a lot of prop firms are going against CFD accounts now because it's gamifying the trading community. So a lot of brokers aren't allowing MT5 or MT4 anymore. They're using DX Trade as their new platform, and it fucking sucks, bro. It sucks. I bought an account with it, and I was like, this shit is ass. So since we do Nasdaq, I do QQQ. QQQ is the equivalent to Nasdaq. It's really that bad, bro. It's pretty bad. Like I got into a long, it froze setting a stop loss, it froze setting a take profit, and it froze as I was trying to close my position because it wasn't going my way. Dude, it was bad, and that happened like 4 or 5 times. And you can't even see your position on your chart either. Like it's so wonky. It's not fluid at all. With swings, it'll be the exact same thing. So, like I was saying before, right? No matter what time frame that you trade, you see the same setups. You see the FEGs, liquidity sweeps, the AMD, the deviations. They all play the same exact way. It's just what time frame are you playing it on. So for options, I'll be doing the exact same amount of money I'll be doing with low time frame stuff. Typically, it's $1,000 to $2,000 per trade, putting up in my own capital, right? So the same thing will apply. With options, you can go crazy though. With averaging in and buying more shares and this and that. Yeah, same thing, holding for a longer time frame. That's it. Same, but different. It's all fractal, bro. It's all fractal. How deep? Okay, let's go ahead and refine this bad boy, yeah? So our daily FEG is this big. Let's mark it out. Our 4-hour time frame, we have one here. That's it. 1-hour time frame, only have this one as well. That is usable and viable. That should be it right there, bro. That should be the fucking flip. Because this is it refined. Notice how the most refined one was filled to the fucking tick. Am I long right now? No, because options don't open until tomorrow morning. But what I will do is I'll wait for a retracement into our favorite tool. OTE. Wherever that might be. That'll be my entry. So like low time frame, let's see. Let's go down to our 15-minute time frame. We have an obvious high here. So we can probably see a move to clear this, then back down, then back up. Maybe like this. Breaking the high, getting OTE somewhere down here. Or better yet, whenever we have a clear move up giving us displacement or an FEG on price action, we can expect that to be OTE. So for example, if price shoots up right here, if price shoots up aggressively right here, right, we can expect that price will retrace back into the FEG again in OTE. Because we have an FEG up here, which can be used for structure, like I was saying. Predicting structure, getting our swing in at a PD array, leaving one behind somewhere right here to rebalance us, and go back up again. So I'll be getting in at OTE for options. That will be my cue. Make sense? That will be my cue. But I will wait until then. Right now, if I were to get into longs, would it be okay on top step? Yeah, I would say so. Light size, yeah. Just be prepared. Just be prepared for it coming back down to your entry point. Because I think like these highs up here are bound to get swept with the FEG right above it, right? But I think we're going to see a deep retracement for New York. Here, that's how I got you. Weekly time frame. Previous FEG was here. You see it interline with the current one, and that's BPR range. Most from one trade. I think it was on CFDs. It was like 9,000. It was during Powell. I was at the bank too, in line. But again, that was a high time frame trade, bro. I love high time frame, and I'm gonna go back to it because I make the most money doing that shit versus the low time frame bullshit. It's true. It's true. It's so much more like stress free too. You just enter and kick back. Set it and forget it. I know. It was on Sunday night. I was with my girlfriend and we're talking about our plans for the future and stuff. And I was talking about me getting the Porsche and getting the house and stuff. And I'm like, but you know what? Like, I really want to get a house. We can start like a family and stuff. And sat down and was doing some numbers with my guy. And house in Monterey for the one that I want, like the ideal size and everything is like 2.5 million. So I need to put down at least $120,000. And the mortgage is gonna be like $10,000 a month. So I got some work to do. Cho, no, because look at So Cho, if you are playing high time frame, right, you don't use the same sizing as you would low time frame. No, I'm sorry, you would. You don't play any lower or higher. It's the same thing. So if your risk is $1,000 on low time frame, it's the same thing on high time frame. You just adjust the contracts to afford to lose more points. You know what I mean? So if 5 points was losing, $200 on low time frame, then you would make sure that you losing 50 points is losing the same amount on high time frame. So you just size down and play the same amount of capital down. That's it. You see what I mean? So if your risk is $1,000 and that's only 20 points on low time frame, then you would lower your contract sizing so your risk is $1,000 still. But instead of losing 20 points, you're losing, I don't know, 80 points. So that's a quarter of the size that you were using low time frame. So if you're using 10 contracts, you use, what is that? You can't do 2.5. So you would just do like 2 or 3. Make sense? And that's how you do it, man. Like when I was doing those like account challenges back then, like early beginning of this year, I do like $500 into like 2,000 in a matter of 3 days, whatever it was. I wasn't using like hella contracts. It was still the same amount of contracts. It was just high time frame. So that risk was the same amount as losing $50, but I was able to spread it across so many more points because I was only using one contract, 2 contracts. Make sense? So for those of you that want to try high time frame out, don't be scared of it. Just use lighter size. And eventually, as you would do at low time frame, you just scale up to build your portfolio. You go from 3 contracts to 5, 5 to 7, 7 to 9, 9 to 12, 12 to 15, 15 to 18, right? You just keep inching your way up, and nothing changes. That's it. And the biggest trap I think that most of you guys that have a personal account in here have fell for is this, right? You go from an account size, let's say you start off with $500. You grow it to, let's say, $2,000. And you're feeling on top of the world, right? Now you can play one full-size contract on NQ. Not smart, but you feel like you can get away with scalping with one contract because a scalp is worth $250, right? Oh, it's only 10 points. So you try to scalp with heavy size, and you blow that shit up like crazy, super fast. That's the mistake. Is thinking you can scalp with heavy size for a smaller move, and you lose everything. A Fresh Express? What size are you playing, or what size account is it? 50K? I would do like one contract max, like one full size on a 50K account. Because again, you don't actually have 50K to your name, bro. It's whatever your drawdown is. So if your drawdown is 2 grand, it's only a 2K account. You know what I mean? If your drawdown is $5,000 and you have a 5K account, Chinese Vin Diesel is crazy, bro. Does that make sense for you though? Like they get you with that thing. Oh, you are $1 million funded. No, bro, your drawdown's only 15 grand combined. You're only 15 grand funded. That's why I say a 50K personal account will always trump a million funded no matter what firm you're with. It does not matter. A personal account will always be better than a fucking funded account. It's your money, paid the same day, no drawdown, no bullshit. It's your money. And for some of you guys, it might be helpful for you too, because your mentality might be better on a personal account because it's your actual money. It's not just some fake numbers on a screen. You know, like you feel like that's your money, so you don't want to let it go as easy as blowing an account on Take Profit or Top Step. Prop firm is less risk. It is for sure. Like if you have the discipline to actually use a prop firm, it's way worth it, right? Because you can turn $50 into a few $1,000s in a few weeks. But if you have the discipline and mentality for a personal account, bro, I mean, fuck, Tony, you have a personal account with options. It's way better than having a funded account. It's your money. I know you feel it. Less risk, but I feel like options are easier in some ways compared to futures. Like your entries can be a little more forgiving on options. But at the same time, if you're not careful with the Greeks and your timing, you get fucked. Like your timing is everything with options. All right, boys. Questions for me? I have a lot of work to do. So if you have any questions, ask. Or forever hold your peace. Arsh, you can. You can indeed. Uh, Weeble or Thinkorswim. Either one. It's ass, he said. It's funny. All right, boys, take it easy.
Yo, what's up, Tony? Okay. Later.
What's up?
What's up,
What's
man?
up?
Did you trade today?
Yep.
What's wrong?
Oh, in the morning I did. Why?
Oh, yeah.
No, I'm in
I
the car
told
waiting for
Richie.
my girl. Huh?
I told Richie what to do, but I was working, so I couldn't even trade.